Lesson number 2, some basic concepts. In this lesson, we are going to look at some basic concepts, the understanding of which is absolutely essential for you to understand financial statements. The first concept for today is sales versus revenue. Sales and revenue essentially mean the same thing. They refer to the money which is due from customers for goods and services sold to them. Some analysts call this the top line. Look at this recent article on Forbes.com. It says that Burger King is entering into lucrative markets to boost its top line growth. So this essentially means that Burger King is strategizing by entering into new markets to increase its sales. So sales and revenue mean the same thing. Concept number 2, profits versus income. Let us go back to our example on Joe's Furniture Factory. Joe buys logs of wood at $40 a piece, spends $10 on conversion, and sells them at $75. So the revenue in Joe's case is $75. The costs and expenses total up to $50, which is $40 for the material and $10 for conversion. And therefore, he's left with a profit of $25, which is $75 minus $50. Profits and income mean the same thing, and some analysts prefer to call it the bottom line because this is usually the last line item in any income statement. Look at this recent article about Alibaba. Notice how the headline says that net profit has risen by 15%, and if you go down to the article, it says net income is rising by 15.5%. So essentially, profits and income mean the same thing. Concept number 3, costs versus expenses. Usually, the terms costs and expenses are interchangeably used, but actually they are different. Costs are anything that are directly attributable to an end product. So if you're making furniture, logs of wood is a cost, and anything else that goes into the making of the furniture directly is a cost. For example, the labor that you pay, the electricity that you consume, and so on. Expenses are slightly different. Expenses are monies that are spent for developing, managing, and accounting for all the costs and revenues. So all items which are administrative in nature are called expenses. So therefore, costs are something which are directly attributable and expenses are something which are not directly attributable. Next concept, profit versus cash. Profit and cash are not the same thing. In fact, they're completely different. Profit is what you earn from revenues after meeting all expenses and costs. Cash is something that you have in the bank and not necessarily related to profits. Let us look at a small example. Assume that you make sales of $100,000 in a month, and the costs and expenses for making those sales is $75,000. Therefore, you end up with a profit of $25 during the month. Assume that out of this $25,000, you purchase an equipment worth $10,000. So the cash that you have is 25 minus 10, which is $15,000. So cash balance is $15,000, whereas the profit that you made out of the transaction still remains the same. Of course, we'll be looking more into this concept later in this video lectures. Summary. Sales and revenue mean the same thing. Profits and income mean the same thing. Costs are different from expenses, and profits are different from cash.